Come on, 2, 3.
Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Monday, March 21st, 2022. And our top story today, have recent events altered investor sentiment towards ESG and sustainable investing? Joining me now to discuss this and a lot more, Bob Colley is the principal and founder of Colley ESG. Bob, great to see you again. Thanks so much for joining us on the program again this morning.
Hi, Jeffrey. It's great to be here.
It's great to talk to you. And look, I want to come to you. We have been talking about ESG, sustainability, carbon net zero, all these topics that have been really important. But I want to get your perspective. We just saw the Federal Reserve here in the United States of America raise interest rates as a result of inflation. We've got this horrendous invasion of the Ukraine by Russia that's having a human impact as well as a climate impact. Has that shifted investor perspective or investor sentiment as it relates to sustainability and ESG?
Yes, well, the inflation story and what's happening with the Fed, that's one strand, and I don't know how much that directly gets into ESG and so on. So that's a whole interesting conversation. But of those two, I think the one which has really raised some interesting questions around ESG is, as you say, the issue with the Russian invasion of Ukraine and some of the knock-on effects of that. And the first thing to say about that is I'm not an expert on geopolitics, and very, very few people working in the investment industry are. Yeah. And so you get a lot of webinars from asset managers and so on. And it's important when you're listening to, whether it's me or any of these other talking heads from the industry, to not to think of us as experts on the geopolitics of it. We don't know what's going to be, what's going to happen in terms of the war and so on, any more than any educated individual watching the news would do. But where the industry is obviously strong is how does that feed through into markets? How does that affect portfolios? What might we do about it? But the industry struggles sometimes with the fact that it's not an expert on something. We like to deal with inflation, what the Fed's doing, things that we understand and we know as much as anybody knows about. But when it comes to something like a war, we're in the same kind of fog of ignorance as the general population, and the industry doesn't always like that. So you've got this huge uncertainty going on. But the one thing that we do know with Russia being involved here and the sanctions and so on is it's got huge implications for energy. And that's especially true if you're sitting in Europe, where a substantial proportion of the energy is being supplied from Russia, and you just can't cut it off like that without there being huge implications for how do people even heat their homes. It's a big issue for the US as well. There's some Russian oil coming in, so it's not quite as in your face for the US, but it's a really big deal. And that has implications in the short term, and it has implications in the long term. So just looking at the ESG implications in the short term, I've already heard people saying, does this now mean that defense stocks are actually socially responsible stocks in this context? We need a military. Do we kind of flip our view on whether investing in weapons manufacturing and so on is a socially responsible? And that's an opinion. You can take one view, I can take another, and that you can build the case either way. So I think it's starting to raise some short-term questions around what is and isn't green, and then you get the whole energy debate. And so one issue that's massive, for example, is nuclear energy a green energy or is it a dirty energy? And again, you've got fundamental disagreements between well-educated, informed people on that, and you can take your stand. So that's the short-term implications. But then there's a long-term story, and this I think is where the ESG story is really the clearest part of this. Long run, oil is if we're successful in making the energy transition that science says we need to make, oil goes away. We have to stop burning oil. We have to find other sources of energy, and they're out there in the long term. There's a lot of solar power potentially. There's a lot of wind power. There's power under the sea. There's a lot of power. We need the technology to harness that. And so long term, I think it really underlines the extent that the energy transition is needed, not just for the sake of climate change, but we need an energy transition partly also to reduce our reliance on, it's not just, Russia's not the only regime that's very oil dependent that perhaps we'd rather not be as dependent on as we are. You can look at Venezuela, you can look at other oil producers that perhaps we'd rather not be as closely tied to them as we need to be at the moment.
Yeah, really good analysis there, Bob. And I don't pretend to be a political expert like yourself. And there's a lot of human devastation that goes with this, and so that should not be minimized at all. And I know you completely agree with that. That's not what we're doing here. You're right. There is a short term and a long term. It just was a few months ago we were talking about the coronavirus. We were talking about the pandemic. This has really and let's go back to inflation for a second, because that has really pushed. We're all facing. You go out and get gas or petrol, depending on where you are. You're paying more. You're paying more for food, and that has really pushed the coronavirus conversation away. Is it your sense? So I think you're really focusing on the institutional folks, and I think you mentioned that. I mean, you got it long term. This is the objective. But what about in the short run? People have to invest money into these funds, whether it's a pension fund, a 401k plan, the NEST program, which is a defined contribution. They've got to have money to invest, or else the money doesn't get invested in some of these socially responsible causes. So what do you think this means to individuals, to retail investors, to the mom and pop on the street facing a lot of pressure?
It's much, much harder to invest in order to beat inflation than it is just to earn a return. And that skill of finding an exposure that's going to rise more quickly than prices rise is a skill which has maybe been lost in the industry, and certainly the public's experience of inflation is very much, it's a generational difference. You've got this whole generation of investment professionals today, none of whose careers have really spanned with a few, only the old guys and the old gals have invested in times where inflation was a real concern, because it's not been a big issue now for a very long time. And so that is, it's a new experience for this generation of investment professionals. And we're perhaps going to see a lot of learning going on that, Grandpa understood this stuff because he was investing in an inflationary environment. That's just not the environment that this generation has grown up in. So I think it's going to be a challenge.
Bob, last question for the segment, then we'll go to a quick commercial break. Just because there's inflation, just because there is this horrific loss of life in the Ukraine, and other things going on around the world, there are other events going on around the world. Would you urge more education? I think the ESG sustainable conversation doesn't get muted, just like the coronavirus, the pandemic conversation does. We still got to be healthy. That doesn't get muted. Would you urge managers and, for example, the COP, I think it was COP 26, those individuals focused on these initiatives to continue to espouse the education, because it doesn't diminish a war, it doesn't diminish the loss of life, it doesn't diminish the increase in prices. All these things have to work together. I feel like in our industry, we really often get this myopic mindset where we just focus on one thing. Save for retirement, Bob. That's what you got to do. Send your child to college, Bob, right? But we have to work with so many different things.
And I think that's exactly the point. And it's possible to characterize ESG as just being a reminder that everything is ultimately connected. We're not playing a game that's just looking at the money, unconnected from how the businesses are operating in this world, from other real world things, wars, climate change, and so on. Things are much broader, much more connected, much more complex, if you like, than perhaps a simple economic models would say. So I think you're exactly right. This is just about reminding ourselves that what we're doing is connected to a bigger economy and to a bigger world, a bigger community, even beyond the pure economic issues. And that's the world. That's what we're living in, and that broader world has implications for the investment decisions we make, and vice versa. The investment decisions we make have implications for the wider world, and we ignore those interconnections at our peril.
Yeah, really, really great point. Well, Bob, as I said, we need to take a very quick commercial break. When we come back, we'll talk to Bob about why my green fund may look dirty. I think you're going to want to stay tuned right here on BRN AM.
But if you're tired of the same old story.
This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking this morning to Bob Colley of Colley ESG. Bob, thanks so much for sticking with us this morning.
No problem.
All right, Bob, let's shift gears here back to sustainability. Really interesting conversation, by the way, in segment one about how this stuff all interrelates. I got a question for you, Bob. Why does my green fund look dirty? Some of the people are looking at their supposed green fund and they're saying, that doesn't smell right. That doesn't look completely carbon neutral.
The issue here is that a lot of this stuff is a lot harder to measure than would be ideal. It would be so nice if, on any dimension, you could look at a company and say, this company is really good as a as an environmental citizen, or this company is really good in terms of its social practices and how it treats its employees and so on. And it would be, super nice if we could look at those and give them a score that everybody agreed on, and bam, you know that so-and-so's the good guys and so-and-so's the bad guys, and we can choose who we invest in. And isn't that easy? Well, some things you can measure in the space of environmental and practices and so on, but very few things can be measured perfectly. And some things, once you start to get into human rights and social policies and so on, it can be really, really hard to come up with good measurements. And so inevitably, two things start happening. One is the good news about that is it means there's lots of different ways to find answers. Different companies can go about finding solutions different ways, and markets are good at that. So there's a good news side to that, but there's also a bad news side to it. That is difficult for an investor to tell who's really got a good story and who's just good at creating a narrative to make themselves look good, because you don't have the numbers that we can all point to and say this is what's really going on. So let's give one very simple example. You might say, I want to reduce my carbon footprint as an investor. I don't want to be contributing to climate change. A lot of people would take that view. So the simple way to do that is to say, I'm not going to touch fossil fuels, and I'm just going to come up with a list of companies that I regard as being out of action. That's nice to measure, or it's easy to measure. You can tell whether you've done that or not. And so there's advantages to doing that way. But someone could turn around and say, you're just shifting the problem to someone else. Someone else still owns all those companies. What you've done has, it's stepped you away from the problem, but it hasn't actually had an impact. If you want to really make an impact, you have to find ways to reduce, to generate the same energy, but to generate that energy in a much more sustainable way. So you have to get engaged with these companies. You have to change their practices. A massive amount of the carbon footprint that the world is generating is to do with things like steel manufacture, concrete manufacture. And if you just ignore those, they're still going to be produced because we need them, but we're not going to get more efficient about them. And so the more difficult way, but the more impactful way to go about creating a positive impact in the world is to get engaged and to jump into some of these companies and find ways to reduce the footprint. But then if you're measuring me, you'll say, hey, how can you claim to be an environmental investor? Because you're investing in these steel companies and these concrete companies and these fossil fuel companies. So I don't look green, but it's possible to be having a really positive impact by working within those sectors. So again, as an investor, you're taking your choice about which route to take. The second route is a more challenging one because you have to keep an eye on it and make sure I'm not just spinning you a yarn about why I'm investing in these companies. So it's a little bit more work for you, but potentially there's more upside to it as well. It's just like a lot of things in life. It can be complicated.
Yeah, and it's like different. It's shades of gray. And look, I'm a big wrestling fan from the 1980s. And when I grew up, wrestling was there were good guys and bad guys, and the good guys never faced the good guys, and the bad guys never faced the bad guys. Then we got into the Attitude Era where everyone was kind of facing each other, and that really is, there aren't any good guys, there aren't any bad guys. I mean, there are in certain instances, right? There's human rights, there's governance, there's things you should do, diversity, equity, but you have to be able, as an investor, whether you're an institutional investor or an allocator like yourself, or just an asset manager, you've got to be able to see these different shades. But you've also got to be able to explain it, by the way, to the investor, to the institutional investor, and we did this because of this. This is our thesis here. And you have to figure out whether or not that thesis aligns with what you believe as from an investment policy perspective.
It is. So if we come back to the individual investor looking at this confusing landscape, and you've got 20 different brochures in front of you, each telling you why firm X, Y, or Z is the super green firm and who's creating the best impact on the world and so on. And you have to see through that. The good news is there are more people looking more closely at the claims that are being made and calling out the people that are exaggerating their claims. So that's going on. The bad news is, everybody's getting a little bit better at telling a good narrative, whatever the truth of their underlying is. So there's almost this arms race in terms of people calling out who's not being authentic in their story, and the ability of the marketers to make things look good. So, from the investor's point of view, you don't have perfect information. I'm sorry, you can't go to, whichever firm it is that's doing the ratings and say, their rating is going to tell you infallibly which is the greenest fund and so on. But just because you don't have perfect information, that's not the same as saying you don't have any useful information. These ratings do mean something. There is information in there, and you look at it and you make a judgment. And then you learn lessons as you go along, and you course adjust if you find out, actually that wasn't what I wanted. It's not delivering. I don't like the way that they seem to be going. So it is you do your best, and if we all do our best, then that's the most we can do.
Yeah, I agree, and it is confusing. I think it's very confusing for people to look at these ratings, whether they're using Morningstar or another analytics tool. You don't really know all the facts about how they collect their data, what relationships they may have. And I'm not picking on Morningstar. I'm just saying that's an example. You don't know the lines of business that they're in, the relationships they have elsewhere, and what that means. You hope everyone operates on a very transparent way, but that's not always the case. Bob, we're going to have to leave it there. Always great chatting with you. Thank you so much for joining us, and we look forward to having you back on the program again very soon, my friend.
Thank you.
That wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the latest curated news in lifestyle, wellness, finance, tech, so much more all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to see our latest content? Search our archives. We'll check out our website. And of course, our streaming partners, Amazon, Roku, Samsung, and over 100 more. We're back again tomorrow for another edition of BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Waiting here for you to take and drink of. But if you're tired,
Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Are you being audited? And do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.